Welcome back, everyone. My name is Mike LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management, and welcome to Mike on Money, where we cover every week what's going on in the markets, what we see upcoming, and we take a deep dive into different topics. And this week we're going to be covering off the new stimulus package in the United States, the 1.9 trillion that the Democrats just approved, and what that means to the markets and what we're seeing out there with that. But with that, thank you for joining us. As always, everything that we cover here is for information purposes only. Do not take it as advice or solicitation. Always do your own due diligence, or reach out to us or seek the advice of professional advisors before applying any of this information or strategies into your portfolio. It's always wise to take a look at your own situation and how that might apply or be effective for you. And of course, if you're watching live today, feel free to ask any questions, hit the Q&A, or if you'd like, or you listen on the podcast or the replay on YouTube, just go to our website, mikeonmoney.com. There you can ask us questions, you can book meetings, and you also can access the library of all our other videos and content that you might be interested in looking up. And as we always ask, love to hear feedback, any ideas, any topics you'd like us to cover off in these or our weekly Mike on Money videos that we put out on Friday. Oh, and it's National Puppy Day. I was off last week, so thank you for everyone for being patient. I didn't do a video. I went up to Whistler, skied with my boys for a couple of days, and those are my two pups. So it's National Puppy Day, so everyone out there who have a pup, give them extra treatment on us. So with that, let's jump into what's going on in the economy. The U.S. New home sales are out for February, so we'll take a look at those. So the stock futures edge a little bit lower. We're seeing a little bit of weakness out in the markets, not much, not in the broad markets anyway, in the S&P 500. The NASDAQ, we've seen a little bit more weakness over the last couple of weeks. Dow down a little bit as we've seen oil pull back slightly. Nothing of big concern there, just a little bit of slowdown from the hedge funds or the big money managers in the U.S. As they slow down a little bit, as oil's had a bit of a run. Nothing to be concerned about, but we'll take a look at that in more detail. And the Fed's hopes of inflation cycle and stable expectations. As we're seeing some price rises, and we've talked about this quite a bit. The U.S. Fed Reserve, has a mission to maintain those stable prices for a few years without having to raise rates. They start to see some price rise and some inflationary areas that creating some red flags for them. But at the same time, they're doing some shifts to try to keep that stable pricing out there. Canada's doing the same thing, again, trying to avoid the rise in interest rate environment. Wall Street's year of bust and boom. Wall Street's giddiness in the recent weeks is a stark contrast, given what's gone on a year ago. This week, or this last week, a year ago, is where the markets hit their lows last year. It has been a whole year working from home. It has been a whole year of pandemic closures. And now we're seeing a lot more optimism out there in the markets. As the economies are starting to turn around, we're seeing some positivity. We'll cover that off when we talk about the unemployment numbers. Of course, we are seeing that bit of inflation, which is a bit of concern, but this new round of stimulus is out there, and as well as the vaccine is starting to lift a little bit of that gloom on the outlook anyway. Oil prices left a little bit vulnerable. As I mentioned, some institutional funds slowed down their buying, but that's after some pretty hefty investment. It doesn't mean they're selling, just we've seen a little bit of the volume ease off a little bit on the oil side of things. Not a concern. We'll look at that actual movement there. In fact, with the recent upward trend we've seen in the pricing, this small little downtick was pretty significant in the bigger picture. The housing market, I mentioned the U.S. just put out the housing sales. They did see a drop to a 6-month low, basically due to the cold weather in February. No one likes to go house shopping in the middle of winter. No, especially if you're in the southern states where they got hit really hard in February. Of course, we saw what went on in Texas and many other states down there. Also we've seen a small rise in the mortgage rates as we've seen the 10-year bond pricing fluctuation. So a little bit of slowdown there, but nothing we expect to really continue. March numbers actually looking pretty good. So we'll see how those finish off, but we don't see that as a major concern. Goldman's CEO talks to their junior bankers about sending them more resources their way, letting them log off, maybe not work on Saturdays. So this goes to some accusations that some of the bankers at Goldman's were making, that they were being worked too hard, the demands were too high, the deadlines were too short. And the Goldman CEO is basically saying, oh, well, we'll try to give you more resources. We'll try to make this easier on you as we move forward. I really wish they would have made things easier on us when I started in the industry, 20 some odd years ago. But at least someone's going to get a Saturday off in their junior years. We'll see how that turns out. U.S. senators are pressing Biden to set an end of date for gas-powered car sales. So this is out of California, not a big surprise. I think I mentioned this 3, 4, 5 months ago when the UK announced in 2030, I think it is. There's a few different countries that do different dates, but the UK, I think it's 2030 that they're not going to allow any new gas-powered car sales. In fact, Quebec, I think, is 2035. They're going to phase it out. And no surprise, California, which has been on the forefront of clean vehicles, higher emission standards, and all these different programs to reduce car emissions or car pollution. They are very susceptible to fog down there. That they would be pushing for the U.S. to move to that same standard of getting rid of or stopping sales of new gas-powered vehicles. We'll have to see. Of course, under the Trump presidency, there's a lot of White House pushing, even suing California to back their standards off because they were much more aggressive than the rest of the country was with their with their car emissions. So not a big surprise that California is trying to not only reinstate those but taking it further. This might become a moot point as car manufacturers start to shift their production anyway. By 2030, I think certainly Volvo, Volkswagen, Toyota, those three for sure, I think, have committed to go to full electrics for their lineups. Then Ford, GM, and that I don't think they've definitely committed to have way more electric options. But I don't think they've gone full electric by then yet. So it might be a natural shift for the industry. So we'll have to see what the White House does or Congress does when it comes to the U.S., whether they set a firm date or whether they just let the market dictate the transition itself. U.S. Trade Chief Tai is focusing on the China trade with the first call. Obviously, there's been a lot of animosity with the last administration with China and the U.S. when it comes to trade. But with that, they're also working with other countries like Canada, Britain, and the EU, where the last administration obviously had a lot of challenges when it came to international relationships in regards to trade. So, the new administration is out there basically saying we're going to try to repair some of these things or at least move them forward. There's definitely a stalemate kind of going on, even pre-pandemic. If you think about this time last year, January, February, massive tariff trade war going on with the U.S. and China, and still lingers to this day. So we'll see how they move that forward. With the COVID-19 rollout, obviously things are getting better. This is what we hope for. In Canada here, of course, we had a slow rollout to start. People were really concerned about, even September, October, whether we'd start to see the vaccine available. That has certainly ramped up. I think at the end of last week, we were down to, I think it was age 75 plus, could book their vaccines. I've talked to several people who have gone and actually gotten theirs now. And the latest numbers I saw were going to be May, June. It was going to open up to the 18 to 69 age group, which is pretty much most age groups, just the young kids left to do after that. So that's very positive. Obviously, this has been, with the mass vaccine rollout and more supply coming in, has been very positive to get those numbers out. And we've seen that across the country here in Canada. And of course, around the world, the US has obviously really ramped things up. With going through their Biden's promise for 100 million vaccines in the first 100 days. I think it was day 57 that they hit the 100 million mark down there, and obviously are continuing to ramp that up. And the UK getting through 50% of the population now have been eligible for the vaccine, so they continue to progress forward. So hopefully, as this gets through, we'll start to see some reopenings. Obviously, right now we're in the middle of spring break here in Canada. A lot of concerns around travel and whether that's going to mean another spike. So I know some of the provinces are still keeping pretty strict rules in place and aren't looking at lifting anytime soon, just to try to get through, I think, spring break and then Easter. And then hopefully we'll start to see some things opening up again, or more things opening up again. So with that, let's take a look at the economy or the markets coming up in the US. I mentioned the US economic calendar. We have the new home sales, which we talked about. The Commerce Department is expecting to show the dip in home sales. They did show the dip in home sales. Dropping just shy of 50,000 units. From the numbers in January, and they're also likely to show a bigger account deficit widening. With that, again, we had a lot of the storms. February building permits were pretty much on schedule for the rest of the year, so not concerned that this is a trend. The U.S. just saw some pretty nasty weather, which certainly stalled things around housing in the U.S. and on the commerce side. They are having the Fed Reserve Chair, Jerome Powell, is scheduling a virtual testimony on the COVID aid relief package and the Economic Security Act before the House of Finance Committee. So just giving them an update on that package and how that rollout is going to work. There's a lot of pieces in that package. There's the stimulus checks, of course, the $1,400, but there was a lot around small businesses, support for schools, support for communities to, kind of reopen and get things back on track. All that, the money's been set aside, but how that's going to be deployed and exactly how it's going to be spent has not been determined. So still a lot of meetings and discussions to happen around that. Video game retailer GameStop, they're always in the news. So this is the company, if you've been following the Reddit story, where they ran up the stock. They've just put out their quarterly earnings where they've seen a slight rise in the fourth quarter revenue as they shifted to more e-commerce business, which is a transition that they had to make, and this is what kind of brought them into the spotlight in the first place, where they were very brick and mortar and the outlook wasn't good. They still have a big road ahead of them, but those Reddit users are still keeping that price up pretty high. I think last I looked, it was still around 180 US, and that's from $20 US before all this started. So we'll keep an eye on it. It is a bit of a trade-in frenzy on it. It did rally back up a week or so ago, well into the mid 200s, before it pulled back again. It's all being driven by volume. There's really not a lot of fundamentals to have it at this price anyway. Not to say that it's necessarily going bankrupt, but it's certainly hard to justify these prices on it. The U.S. Supreme Court rebuffed Facebook's appeal in its user tracking lawsuit. So there's a class action lawsuit against Facebook, one of many, whether it's antitrust or they're suing Apple. These tech companies it's hard to pick a side, or really, they make so much money sometimes. It's hard to worry about, who wins what. It seems like they're just trading cash. But right now, there's a class action lawsuit on Facebook, where they were illegally tracking the activities of their users when they were logged out of the platform. So, technically, if you log out of an app, you might have the expectations that that app's no longer tracking you, or it's not receiving any of your information. Funny enough, that's not true of many apps. In fact, we've seen studies, where computer experts or tech experts will be able to go in and basically follow you, whether you Google search. I think one of the examples I saw, a parent had Google searched the theater for a certain movie and the showing times, then they took a picture on the phone, and then, they drove and used the traffic app. Basically, through all these apps, which all sell their data, they were able to piece together and follow someone for a week, every single place they went, where they shopped, what they spent money on, and everything else. What their interests were, how old their kids were. So you just be aware, your apps do this, and there is a big lawsuit against Facebook for that. And they do sell that data. So, if you know what you're doing, and you can bring all that data from all those apps together, you can actually track people. And a lot of companies do that to track your spending habits, what your interests are, what you like. So, if you've ever been shocked by an ad that pops up for something exactly what you've been looking for, it's probably why you've just been targeted by your online presence. Now, there is a new feature with Apple. Apple's moving forward on a feature where you're going to be able to turn that off by app. So that means you can go to each app and say, no, I don't want that to happen. And that's another lawsuit where Facebook and others are suing Apple to not put that in, because of course that will cut into a lot of their revenue, because they sell that data over to their advertisers to be able to track you around that stuff. So just to be aware of that. Hopefully Apple, and I'm sure the other platforms will follow suit. If Apple puts theirs through, we'll have the ability to turn that off shortly. AstraZeneca, of course, a lot of controversy around AstraZeneca over the last couple of weeks. The U.S. trial data, kind of came out to give confidence around that, the blood clotting that we've seen, or sorry, the UK, back that up, that Europe, I think there was Sweden and Germany and another country, saw some cases of blood clotting, that people dying or getting very ill due to some blood clotting after receiving the AstraZeneca vaccine. So there's another deep dive into the trial data. They found that their conclusion was no, it was not, caused by it. That, yes, these patients had blood clotting, but blood clotting was from other sources. And I think one thing to keep in mind, especially when we talk about any of these vaccines, is so far, a lot of the people that have received it are people who are high risk or already, medically, diminished or older. So they are susceptible to these other illnesses or these other, unexpected health events. And what the study came out with is basically AstraZeneca didn't cause it, or there was no proof to say that it caused it, that these people might have had those blood clots regardless of the vaccine that they received. So that's what came out. So out of the US, so a bit more confidence. The EU did reopen. I know a couple of countries stopped. They did reopen using AstraZeneca. Now, I know there was some talk this morning on some of the trial data as to how old it was or how new it was. So that, I think this debate is going to continue. But overall, I think the ones that I saw of the data was out of 17 million AstraZeneca injections, 3 cases of blood clotting. And they actually would have expected to see more of that just naturally, as blood clotting is something that happens in the general population. So that'll be an ongoing story we'll stay on top of, because of course Canada is got AstraZeneca approved. and they continue to use that one. Hopefully, we're going to see the Johnson & Johnson one more massively available in Canada here soon as well. Low tips, long waits. DoorDash, dealing with their drivers' complaints. Basically, what we're seeing, we're seeing this, here in Canada as well. Uber Eats, of course, deliver from restaurants. DoorDash deliver from restaurants, but they're expanding out. You can order from grocery stores now. You can order from liquor stores. You can order almost anywhere. It's almost a taxi service for delivery with DoorDash and some of these other providers. But they're dealing with a lot of the independent drivers kind of being a bit angry where on the grocery delivery service, they're not getting the tips. And for the drivers, a lot of their income comes from the tip as they don't get paid much from the apps themselves. The fees inside the apps tend to go to the company, not the driver. And I believe that there's a flat, small rate that goes to the driver. It's a different model with each provider, but most of their incomes come from the tip. So, they're being forced by DoorDash to offer this other services like merchandise and grocery delivery, but their income is much, much lower, obviously, on those services. So there's a bit of back and forth going there. Tesla stock rallied after ARK Investment predicted a $3,000 stock price. So if anyone's followed me or my comments on Tesla, I'm not bashing the company. I think the company is great. I think they have a really amazing product. But $3,000 stock price is a bit, I think it's a bit aggressive where it is right now, and it's even off its highs. I think it was trading at 660 this morning US. It was over 900 at one point. And really the reason why I say that is just the growth in their market or in their sales and the revenues they make. They actually, most of the revenue is not made on selling the car. They actually lose money on selling the cars. They're making most of their money on carbon credits or credits from the states, different states or credits from the governments. So to justify the rally up that they've had in their stock price, as well as to get to 3,000, I think would take a lot, a lot of growth in the midst of a ton of competition coming to market here, and I've talked about it before, so I won't dive too much into that. I really think the winners here are going to be the supply chain companies that bring the materials into the building of these cars or vehicles. Whether it be battery metals or components. There's a lot of electronic components that go into these. So I think that's the area of growth, not necessarily betting on one particular manufacturer, because I think the competition is just going to be exponentially bigger over the next year to 3 years as more and more of these car manufacturers commit to electric vehicles, and that includes the hydrogen electric or the electric plug-in hybrids. Blackstone is rolling the dice to do an acquisition in Australia. So Blackstone is a financial group, and they're doing a private investment. They're taking the casino operator Crown Resorts for $6.2 billion. They're taking it. Had a really tough year, obviously, with all the closures. But so here's a cash injection, which gives them a bit of a reprieve from regulators on their cash flows and on their working capital minimums. So they're taking them private. And this goes back to what we talked about in past weeks. We're going to see a lot of probably M&A and acquisitions when we look into hospitality and entertainment, because those areas, of course, were decimated over the last year. Yes, they've started to move up a little bit, but certainly haven't started to see the revenues return, and their valuations have been reduced. So there is going to be some opportunities for some mergers. There's going to be opportunities for acquisitions. As we saw through the energy sector all through 2020, as it was hit hard, we're going to see it very much so, I would think, on the hospitality, entertainment areas, as well as the healthier companies decide to pick up some less healthy companies for the turnaround. Coming up in Canada, the Deputy Governor General of the Bank of Canada is scheduled to address Toronto professional group. So there's a big conference in Toronto, just talking about the overall market-wide stress, of course, the interest rate volatility or potential volatility in inflation, and just generally where the Bank of Canada sees the economy going. So we'll keep an eye on that conference. There's a lot of virtual. Well, it's all going to be virtual with some in-person meetings, but it'll all be broadcast, so we'll stay on top of that as well. If you haven't seen the news, CP Rail, Canadian Pacific Rail, is buying up Kansas City Southern Rail deal, boosting its farm sales. So it's a $25 billion deal. It's the first time a Canadian rail company is going to have a Canada to Mexico network. So this is good in a lot of ways. So not only the cross-Canadian transportation, which a lot of our goods move across Canada via rail, but now the north-south line. And on the heels of the Keystone pipeline being canceled, this is going to be positive for the Canadian oil market. They'll be able to transport it by rail and all our other goods as well, kind of north-south. So a good opportunity for CP. I think good opportunity also for the supply chain for Canadian exports to the U.S. Huawei lawyers are to focus on a witness refusal to testify. So this is the ongoing extradition case of the Huawei CFO to the U.S. And been going, I think it's almost 2 years now. So one of the lead Canadian officers that was there during the arrest is refused to testify at the case. So of course their lawyers jumping on that as to why, and maybe it was inappropriately coordinated, and that's been a bit of their argument the whole way along, is whether the U.S. gave the right information or to the Canadian police for the arrest and extradition, or whether they arrested her without the proper documentation in place. So ongoing, of course. And probably not going to end anytime soon. The deal with Canada's CPP pension fund is buying a 45% stake in a Brazilian sanitation company. So they're taking that private, just expanding on infrastructure and taking a 45% stake there in the privatization of that. So we'll see how that goes. Obviously, a lot of things going on in Brazil. I think, again, this is a big value purchase. Where the valuation is quite low, but they see expanded as hopefully things improve in Brazil over the next 3 to 6 months. On the forex side, the U.S. dollar rose a bit around worries on the international economic stability, focused mainly in Turkey. Their central bank governor was fired, after some UK-EU tensions over vaccine exports. And safe haven assets being kind of hidden away in Turkey. So international concerns, as we've always talked about, whenever we have international or even domestic concerns, the flight to safety is the US dollar. So not a bit of surprise, not really a change in trend on the US dollar, just a small uptick while that gets worked out. And as I mentioned, the US bond 10-year note, we've been following this one. This is really kind of indication of where inflation might be going. We've seen it kind of go from just below 1% in January all the way up to where it is to 1.68 on Monday. It's pulled back down a little bit. Probably going to tick back below the 1.6 again, but it is showing that those numbers. Remember, if 1.8, 1.85 is where we're really going to see some inflationary pressures on the Fed when it comes down to inflation. On the commodity front, I mentioned oil. We did see that pull back about 1.7%, 1.6%. Not huge, but a bit of a movement. And we also saw copper prices, which hit an all-time high or a while back, slow down a little bit. Again, just a little bit of ease at 0.6. Not really seeing a slowdown in the overall market. Just a slowdown in that growth. And, we can't have a straight line up on any of these things. So it's just a little bit of stall while the market takes a breath. So with that, let's talk about this $1.9 trillion stimulus package that the market just put out. Obviously, there's dumping a ton of liquidity into the market, so it's very positive when it comes to the economy and investing. I mean, one of the great things about this stimulus package, as I mentioned, includes money for small businesses, for communities, for schools, but all the money is going into the hands of people that are going to spend it, because the last stimulus package in the US, and in fact, a lot of the stimulus that went into Canada, some of the estimates are about 7 out of the $10 that was handed out hasn't been spent yet, right? It was tucked away, which is good and bad. It's good that we got through fairly protected or fairly well unaffected, as far as the investments go last year with those numbers. But it's also very positive. That means that that $7 is still ready to be spent into the economy in 2021. This package, because there was rules and who got it and how it's being rolled out, is pretty much going into the hands a larger percentage of it's going to the hands of people that really need it. And so the likelihood that it's going to be spent right away and pumping dollars back into the economy to help it recover, it's very positive. So with that, we do see things, the stimulus package being a positive thing for the markets. We see a positive thing for the economy. And we certainly saw immediately after it being approved, the broader index, S&P 500, being pushed up, higher. And a lot of that was on sectors that did not get a lot of love last year, like banks and energy companies. As we'll see here, a lot of this is shifted from that growth to value, which we did 2 weeks ago, a whole video on the fact that 2021 we do see values being the more favorable area of the market versus growth, and certainly that's what we saw start to happen here with the stimulus package coming out, and of course that's on the tail of the very successful, or the much more successful vaccine rollout that we're seeing in the US as we move into this the 100 days of Biden's presidency. So with that, other areas we're seeing shift is that tech. We're despite the money flowing and liquidity flowing in the market, we're continuing to see a pullback on the tech sector. I don't think that means bad things for the tech sector. In fact, if you followed me since I think pretty much December, I've been saying, there's a lot of names in there that were overvalued, that cash had to flow out of those names. I still think there's good value within tech. You just want to be much more targeted than the broad NASDAQ when it comes to your investment for 2021 there, because I don't think a lot of the stimulus package is going into those discretionary items. This is going to move into those, the staples. What do people need? Or where does money need to be spent? And technology might be as part of that, but I would really stick with those service and go to the chip manufacturers instead of chasing after things like Tesla and things like that. And again, going back to the service chain of value, the value managers. And we've seen money. If we look at flow of funds and where it's going, we're seeing a flood into value right now, and a lot of that's coming on this new stimulus package. Of course, as we always talk about, inflationary concerns are still there. We have seen, some very positive. We've seen some movement on the unemployment numbers. At the high of this whole pandemic, the U.S. got to over 14% unemployment. They're sitting just under 7% now, which is a mass improvement, cutting it in half. The real unemployment number is still estimated around 10%. Because when you look at unemployment in the U.S., it's much different than Canada. Every state is different. Your qualification is different. You only qualify if you're laid off, if you quit, or you're fired. You don't qualify. There's a bunch of other hoops to kind of go through to qualify for unemployment. So the real number versus reported number are 2 different things. So the reported are those people actually receiving unemployment versus the 10% being those who are looking for employment. So there is a bit of discrepancy there, but it is improving. And the stimulus check not only giving money to people who might really need it, whose income is suffering, but also that they're spending that money out in the economy, which will of course drive more business and more jobs, more job creation. One thing that I will mention on that unemployment numbers, it was interesting to see that the largest growth of numbers is from the public sector. The government employment actually has dropped in the United States, so they're not hiring nearly as many that they were previously, and maybe that's a transition going forward. So with that, that's pretty much what I'm going to cover on the stimulus. The only thing I will talk about as well is, behind this stimulus package, there's probably not another round of money for the public. But that being said, there's another $3 trillion that the current administration in the US is pushing forward. Infrastructure, there's a big proposal for spending and a complete new approach to, for the US anyway, approach to the infrastructure spending, really looking at ways to improve their infrastructure. I mean, even under the past administration, they talked about, the airports and bridges, being in desperate need of investment and repair. But the new administration, Buttigieg, who's head of transportation infrastructure, has come out with a plan that obviously is still being vetted and it hasn't moved forward, but a lot of money into transit, trying to move actually away from expanding highways or making them bigger to accommodate more cars, but actually reducing them, accommodating less cars, but making better transit, better mass transit to move people around. So there's a lot of money being looked to be put into that sector in the United States. So I think that's going to be a very important sector that we have to look at when we talk about trend. Government spending over the next year or two. And then the other part, which we have talked about many times, is of course the green tech or the green environment. There's another $1 trillion, I think $1.2 trillion of that $3 trillion that the current administration has earmarked for converting to more environmentally friendly technologies. And again, you don't even have to get in the argument whether we should be spending on environmental friendly for the planet, for our next generation. You can even park that argument aside these days. Shift into these technologies, they're cheaper. They're going to be more accessible than the natural, the old fossil fuel technologies that were there. Maintenance is cheaper. Upkeep of the vehicles are cheaper. And the more and more that we adopt them, like any technology, the cheaper and cheaper that they get, right? The more production there is, it becomes cheaper than producing, fewer amounts that we were before. And, a great example of that, of course, the first thing the Biden administration did was come out with, here's our new mail trucks that we're going to be buying over the next couple of years, which are all electric. UPS turned around a week or two later. Here's our new UPS trucks that are going to be all electric. That infrastructure spending on transit and that they're all looking at non-fossil fuel solutions. So, as I said, all these things just means that's cheaper, and it's not even a question of pushing out fossil fuels. Fossil fuels will just be more expensive than the green technology. So that means cheaper operations for the infrastructure and for the operating costs, but also more jobs down the road, because now you're creating jobs in this new sector. Those are long-term jobs because that technology is going to be around for much longer than fossil fuel, which is only going to be diminishing in jobs as we move forward. So I think it's a wise move by the US government. We're going to have to keep a very close eye as that rolls out and see where that money gets allocated. So with that, I will say thank you for joining us again this week. I will be back next week normal time. And as always, visit us at mikeonmoney.com with any of your questions or follow-up. We'd love to hear from you, and enjoy your week. Hopefully you have a nice, beautiful, safe week out there. Thanks. Bye.